Returning guest Andy Schectman is the CEO of Miles Franklin Precious Metals, and he joins us this Wednesday, September 11th. That is 9/11, 2024. Andy, thanks for coming back on Liberty and Finance.
Always good to be here with you, Dunnigan. And that was one of the smoothest intros you've ever done. So kudos to you and good to be back, brother.
Well, we're always grateful to have your presence here. And also, guys, just so you know, right after our live stream tonight, Andy is kicking off his own Miles Franklin live stream channel, and we're going to roll over there and take a look. So I'll put the link to his live stream at the end of our live chat here, so we can all jump over there together. And looking forward to that. There's a lot of hot topics. Andy, what are you going to be talking about during your live stream?
I got a whole bunch of questions that were submitted earlier, and we'll take more as they come, and I'm sure there'll be plenty to talk about. And I plan on having guests once I learn how to invite those guests. You might be the first one to come on the show, but this is just kind of my maiden voyage, I guess, of being able to do things. I guess at my own speed. So I'm looking forward to doing this, but I would never, ever, ever miss my Tuesdays or my Wednesdays, depending upon which day they are with you. So that's first and foremost, but I appreciate you making that announcement. Yeah, if it weren't for your son, I wouldn't even know how to invite and to do the live stream after this. So I'm excited to try it and see where it goes and invite some guests along the way. And we'll see. This is it. It's the first one I've done, and a little nervous, but looking forward to it.
Well, we're all looking forward to it. You sent out an announcement, and folks, if you didn't receive the announcement, again, I'll put the link to it in our live chat here, so everybody here will have the link
Thank
to
you.
Andy's live stream.
It's nice of you.
Yeah, sure. And we have also just giving you a heads up, guys. We're going to address at least three major topics tonight, in addition to your questions that are submitted in the live chat. If you're not already in the live chat, you got to be on YouTube, Liberty and Finance, and then you got to be subscribed to Liberty and Finance on YouTube. Then watching this video, you can be in the live chat, and you can go ahead and just post your questions for Andy in the live chat, and we'll get them in front of him as time allows. And we are going to hit three more big news stories that all came out, at least to my attention, in the past week. One was about a week ago. A scandalous news story came out saying that in 47 states in the US, there is smoking gun proof evidence, recordings and memos and emails and statements by officials that property taxes in those jurisdictions are not being set as required by law by comparables with other houses in the same area that are comparable to the properties that are being taxed, but are being set by municipalities just figuring out what next year's budget needs to be, what the revenues are that they need to hit, and then backing the numbers into it and taxing everybody accordingly on their unrealized capital gains of their homes to whatever the municipality needs. And anybody who doesn't play along is at risk of losing their job, etc. And it has caused a upward spiral in home valuations for tax purposes and in taxes that have pushed at least 1/3 of property owners into be, beyond what the federal government considers a reasonable threshold for affordability for ownership. In other words, they're taxing people out of their homes. And you know this because you know people in your family and your friends and relationships, or you've heard of people who have been taxed out of their properties. And that's not, you're not making that up. It's a real deal, and it's a scandal, and it's being done illegally. There are legal cases that are started. They're not yet in all 47 states, but it's a fast-growing thing. We're going to talk about that. Secondly, the same week, it's been about a month and a half now that the stories have been coming out about Warren Buffett, the Oracle of Omaha, the most wealthy investor in the world, and perhaps the most successful investor in the 20th century, has been steadily doing tranche after tranche of selling Bank of America stock in particular. He is the majority stockholder of Bank of America, and he's sold over 6.2 billion as of today of his stock in Bank of America, which represents about 15%. And he still holds quite a bit more, but this is a big deal because the last time he did this was right before the global financial collapse. We'll talk about that. And in contrast to that, or remarkably similar in different ways, is Russia announcing over the past week that for the month of September, they're going to be purchasing 19.1 or $19.2 billion of gold. And so you think about what this all means. We're going to talk about with Andy what it all means and why we should be paying attention. But then we're also going to talk about your questions. So, Andy, if there's anything that you've got burning on your mind too, that you wanted to
No,
bring
I
up,
think
we can do
that's
that
all
too.
great. I think that's all good stuff to talk about. Let's do it.
All right, so let's first jump in on that real estate tax scandal, folks. If you look in the description of this video, you will see links to news stories on all three of those topics, so you can plunge into it to your heart's content and go down the rabbit hole. And it's concerning. This first one is something that I think, when you and you always tell us trust our gut, and I think people's guts have been telling them for a long time that there's something going on with property tax valuations. They just seem to keep spiraling upward, and people who lived in homes, they see sale prices going up in their neighborhood, or they have for the past several decades. Now that's changing. Over the past couple of years, things are rolling over, and they're going sideways to even down in some areas of the country. Not too far where we live from where we live in Central Florida, the area around Lakeland, Florida, is the number one place for mortgage foreclosure rates in the country. And so there's a lot of people that are struggling to make their mortgage payments. Hard times are hitting a lot of people, whether it's through unemployment, underemployment, or just increased rates if they had variable rates mortgages, that sort of thing. But affordability is a big deal. But just being able to stay in your home, for goodness sakes, this is part of the American dream, is to be a homeowner, which means you shouldn't have to be being taxed out of your property and taxed off your land. But that seems to be what's happening to an uncomfortable number of people, and likely to sharply increase. But there's been a scandal that's been broken open here. Kudos to those who are doing the investigation, but it shows that one of the implications of this is a lot of people might lose their homes. Another implication of this is that those municipalities that have been insolvent or struggling and trying to make their budget have been basically using this scam to steal from mom and pops all over the country to make their budgets. And so they're teetering on the financial edge. And a lot of those municipalities also offer municipal bonds, which may be held by individuals, or maybe held by institutions, maybe held by retirement plans, that sort of thing. So this is one more thing we've talked about in the past: hidden risks to your retirement. Who knew? Who knew that runaway, illegal, basically price fixing of tax valuations by municipalities could pose a risk to your retirement, because those municipalities might go under, their bonds might default, and then your retirement plans that may be based on those might default. So, reflections from you, Andy, on this breaking story and what it means to average moms and pops.
Well, first of all, let's take a look at it from the last part of the statement, and the urban doom loop that is created, not through the residential issue we'll get to in a moment, but through the commercial real estate, as all of the businesses have shifted to working from home, and you're seeing the issues with the commercial real estate. No one's there, and of course the problems with some of the cities with the influx of illegal immigrants making it dangerous. You're seeing many of the shops close, the restaurants close, even the chains like Whole Foods or Walgreens, pull up tent and leave. And the revenue, as you mentioned, for the city in terms of the revenue they take in through taxes is beginning to be very strained. And as more of these shops and restaurants and bars leave because there's no business, because all of the white collar people are now working from home, they start to leave. So then you start to have a problem with the services of the municipalities. There's not as good of a trash removal. There's too much delay in police. They're not as efficient if you call 911 or if you need an ambulance. And all of these social services begin to get strained due to the lack of tax revenue. So then people leave because of this, which only creates more of an issue, which creates it's an urban doom loop. And I am very concerned about that, especially in some of the cities. I've talked about that former one AT&T center in St. Louis that sold for $205 million. in 2006 recently sold for $3.7 million. And so you're beginning to see the inner cities really face a problem with taxation and the ability to maintain, as you mentioned, not only their bonds, but the services that go with it. And then as we take a look at what's happening with the residential real estate, the issue, part of the issue is that the majority of all of the mortgages are locked in at 3 and 4%. And that's great until, like you said, you lose your job. And one of the issues is that during the last several years, with interest rates that were suppressed as these mortgages were locked in and all of the free money that was thrown at the system, and all of the people moving to places like Florida, you mentioned where you live is an epicenter of foreclosure. Well, everyone left, like me, Minnesota, and you, Ohio, and others left the Midwest and came places like this. And with that, you saw massive acceleration in property value due to low interest rates and easy money. And so all of these people are locked in at low interest rates and at high value purchase prices. And so you have a situation where, as the economy is slowing, as rates have gone up, and there is less demand for houses, no one is selling. There's less demand for purchasing houses, but at the same time, there's not very many houses to be sold because a lot of these people can't leave. They're locked in to their mortgages, and there has not been an equilibrium adjustment yet between interest rates, the market, and home values. And so they're irrationally priced. And so when you have the state or the municipalities basing property tax off of these escalated values as the economy is slowing, certainly it's becoming an issue. In fact, my home has increased every single year, but since I've been here since 2021. But you know, you could argue that over the last several months that the demand for homes in this area have come down. But not only that, insurance prices have gone way up. And you want to hear something? The most absurd thing that I've seen in a long time, and this is in the CPI. The article that I read was titled "The Most Absurd Number in the CPI." According to the US government, the cost of health insurance has declined 31% over the last 2 years and 10% over the last 5 years. Now, that's not true. Insurance is going through the roof, whether it be health insurance or home insurance or car insurance. In Minnesota, where I left, car insurance is up 65%, the most year over year in any state in America. And it's expensive down here in Florida, too. So when you look at rising home prices that have not reflected the adjustment in the market and the taxes that are pegged to those higher prices that keep on going higher based upon a high sale price, yeah, it's going to create a lot of problem, including insurance, which is becoming prohibitively expensive, at least down here in Florida, between rising taxes and insurance rates that are going through the roof. Yeah, people are going to have a hard time. Now, I admittingly have not read that story that you're talking about, but it frankly doesn't surprise me one bit. I have never had an adjuster in my house here from Palm Beach County. Now, I hope they're not listening and send someone over here, but they have no idea what the value of my house is. They're guessing. So, this is something that doesn't shock me at all. And I was thinking about it recently. You have all these people not only are trapped at low mortgages that they can't move and even go laterally and take it with them because the cost of money has doubled. But as to your point, I was thinking, my goodness, between insurance, between the just inflation, and between higher taxes, it's becoming quite prohibitive. And in Florida, in most of the communities in Florida, you have some form of HOA tax, and in the it's really a problem in the condominiums where HOA taxes are going through the roof. And because of the hurricanes and insurance and all of these things, people, as you mentioned, are being priced out of their homes. They're just going to have to walk away and give the keys back to the bank. It's not a good thing, and I don't think it gets any better anytime soon.
Yep, we've got a comment in the live stream about this, talking about the principle of taxing unrealized gains. Everybody's that I know who's heard that proposal from the Biden administration or the our Kamala's camp saying that in stocks or Bitcoin or whatever, they may say we get a mark to market at the end of each year and pay taxes on any unrealized gains. And people are just going, that's unconstitutional, that's illegal, and everything is. What happens if things drop the next year? You never get it back, and that sort of thing. But if you think about it, this property tax rates being set by the presumed value of your home that you haven't realized is remarkably similar in principle. So it's very concerning.
It
And
is very
another
much so. And you think you own your house free and clear, don't pay your property taxes once, watch what happens. They'll foreclose on you. But when you talk about the unrealized gain that she's proposing, it will pass in the respect that she's talking about only levying it upon those who have 100 million in assets. What does everyone care about those people, right? Well, not only are those the people who will pick up and leave and move out of this country, even if they live on a boat in the Caribbean or go to the Caymans or wherever the hell they go, they have the ability to do so. They can pick up tent and leave. They're the job creators. They're the ones that are paying massive amounts of taxes. And they're the ones who have huge positions in things like Bitcoin, in things like Nvidia, and things like Apple. And if they are forced to sell, it's not for us normal folk, but if you have over $100 million in assets, well, what do I care about them? Well, I'll tell you what you'll care about them when between November and January, when they crater the entire system and sell at a regular capital gains rate instead of 44%, or in terms of the unrealized gains, which is anti-American. It will crater and collapse the market. The other thing she talked about was doing taxes or raising the capital gains taxes on those making over $1 million a year. Again, these are very wealthy, successful people who have large portfolios, 401k type of portfolios. Now, it wouldn't affect the 401k, but certainly these people also have investments outside of the 401k that they will sell between November and January, if indeed she does win, based upon the fact that capital gains will double. It's ridiculous. It will crater the markets. It's the onslaught or the beginning of the onslaught. It's the beginning of a reset. If you did that, you would reset the system like that. And just the amount of selling by the very wealthy people would be enough to crater everything. And I don't know, it's not very well thought out, but here again, it would probably pass because, tax the rich, they don't pay their fair share type of deal. That's not something that will meet much in the way of pushback by the average people, but it will destroy the market in a very, very, very fast fashion.
And let's not forget the insidious nature of these types of these egregious changes that eventually affect more and more people until they pretty much affect everybody. The way that they get introduced is through a sliver, through the camel's nose under the tent, saying it's only going to apply in this case. So the majority of people go, oh, okay, well, I guess it's okay then. That's how we ended up with the alternative minimum tax. It was only going to apply to a small fraction of 1% of taxpayers. Oh, looky, with a policy of currency destruction and debasement through inflation that all countries of the world with their fiat currencies have been following, more and more and more people every year are getting pushed up into having to pay alternative minimum tax. Now it applies to a huge swath of American middle class. So whatever gets introduced, in your state, we're not going to have a seatbelt law. We're just going to have, that it's recommendation or whatever, and then eventually it finds its way into incremental changes. People say there's no slippery slope. That's a fallacy. That's the way things get done in politics, is you make them sound palatable at first, and then you just keep hedging and hedging and boiling the frog eventually. The other thing about this, we have Jim Montgomery saying the local governments are valuing properties above what they can be sold for. It won't end well. Darren Smith says, Jim Montgomery, this is going to cause people to sell just to meet the tax. And we're certainly hearing from people who have been talking to us about that, whether having to sell their lake home, getting taxed off their property. I've got a couple of people who said they might be willing to come on and give testimonies about that. So
It's really
serious
awful.
stuff.
It's really awful, and it's real. And in places like Southern Florida, the cost of insurance is exorbitant. It's truly off the charts, and you're getting insurance companies leaving, and you get dropped if you make a claim. I talked a lot about my daughter and the water damage problem that we had on New Year's Day, where basically her toilet ran for 12 hours, and I could have taken a shower under the ceiling fan underneath her room. The next morning, it was a horrific experience. I paid for it myself because if I would have claimed it on insurance, I'd have been dropped. And they're dropping people left and right for not making. And it's what's really crazy about insurance down here in Florida. And I don't know if it's this way in the rest of the country. But when I originally moved here, and I was having a hard time getting insurance. I'm like, well, what the hell's going on? I've never made a claim before, and evidently, there were a few claims on this property, both for lightning and one for water. The previous owners. I said, well, what the hell does that have to do with me? They're like, well, it actually follows the house, not just the owner any longer. So insurance companies are making it very difficult. And so when you talk about rising taxes for much of where I live, I think insurance is as big of an issue or more. But you're right. Between taxes and insurance, it's incredibly expensive to live down here. But when I look at it, I can justify it because I'm not paying 10% Minnesota state income tax. Well, that's a convenient way of justifying something that's still absurd and not getting any better.
And there is a proposal out there to eliminate property taxes across the board, nationwide, and replace it with a sales tax. So something to think about, because at least it would give each individual some control about what they do, because people can backyard garden rather than eat out at a fancy restaurant or whatever. They can do different things to affect how
Well, I
much
mean,
they would
you're
pay in
making
sales tax.
they're making it impossible for young kids to have a house, period. The American dream is disappearing. The dream of owning a home is disappearing. When you and I were kids, one parent could work and the other one could stay home with the kids and afford it. But, when you factor in the cost of your mortgage, that's only you will pay more in Florida for association taxes and insurance than way more than you do for your mortgage. And so it's beginning to be prohibitive. And it's a scary thought as these municipalities, as these cities
Mhm.
become starved for revenue, they will continue to tax and figure out, what do you do? That's Keynesian system, tax, spend, borrow. It's running its course, and it's gonna end badly, I think, for sure. Especially when you now see that there are municipalities actually doing this knowingly. Yeah, that's a bad thing.
Well, you've warned us for some time. You've quoted that line that in a deflationary depression, you can't escape unharmed. The idea is to be harmed the least,
He
financially,
or
to
she
lose the
who
least.
loses least wins. Well, that's it.
And it's very difficult, having lived over the past 40 years in this kind of rising prices, rising stock markets, rising real estate market, rising bond market genre to regime, excuse me, to understand what it's like when all that rolls over, when all these things start going down, 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 and there's more layoffs and there's more foreclosures and there's more people selling and there is no bid. On all of uh, the dependencies that have been established on that rising market are all undermined. So what that's going to wipe away in our financial lives, in our culture, in our communities,
Well, you also mesh that in with the lowest savings rate ever, the highest level of credit card debt. The indebtedness is at all-time highs, the savings rate at all-time lows. It's not a good time for this to happen. And they keep the public blissfully confused as the numbers that come out of the BLS are complete nonsense. They 818,000 jobs on top of the several hundred thousand they did during the year, over a million jobs. No, the employment rate is horrible. They even talked about it on the debate. We did the greatest job ever with jobs. Well, not only did it start from the midst of a pandemic when no one was working, but the jobs they tell us are revised, so they haven't hit the mark. In fact, they've come well short of the mark. And the 1.5 million jobs since last year, June, that were created or that were lost, full-time jobs have been replaced by just over a million jobs that were all part-time, that are filled largely by illegal immigrants. And it's the 16th or the 17th month in a row consecutive that we've seen an increase in part-time jobs. So as the good paying jobs with benefits are being shed, you're seeing more and more people being forced to take on second and third jobs just in order to make ends meet. It's a scary thing. And but this, again, when you have the Bureau of Labor Statistics changing things so frequently, it's very difficult for people to understand. John Williams, I just saw of Shadow Stat, said, no. The inflation's not 3, add 8 to it, and you are at a closer level of what inflation is. So you have 11% inflation. You have auto insurance and home insurance and all of these things that you need that are going
Mhm.
higher in price. Food and medicine and all of the things that you need
Mhm.
are going higher in price, and yet it's becoming a far more challenging environment. In fact, when we talk about where we are right now as an environment, we just triggered the SAM rule. It's by Claudia Sam, the economist, where if over a 3 month moving average, the unemployment rate rises by over 0.5%, you're in a recession. Well, it just went up to 0.53 above the 3 month moving average, or the low from the low point. We're there. It's had a 100% success rate and predicted the last 9 recessions. And the same thing is true about the reinversion of the yield curve
Mhm.
since 1950. 100% accuracy. It's predicted every single recession. And employment is a lagging indicator. So not only have they been lying to us for the last year about the number of jobs, and then they revise it a year later and then react to it. I mean, they knew what it was and react to it after the fact. It's a lagging indicator. We're in a recession. And, a rising costs, a rising inflation, and a little or no economic growth, that is the precursor to stagflation. And that's painful. That's the worst of both worlds. Little or no economic growth, higher taxes, and higher inflation. That's bad. That's where we're going. And yet the BLS doesn't do any of us any favors by trying to paint a picture and then revising it 12 months later. Sorry, we were wrong. And then the Fed acts upon that mandate.
Mhm.
Not good. No, it's not.
We're going to turn the page to the next topic, which is the announced sale. It's been done. I mean, these are in 6 tranches so far now by Warren Buffett selling $6.2 billion worth of his Bank of America stock. Uh, it's interesting for ordinary folks who are trying to figure out which way this is going to watch those who have often have a farther vision ahead because they are privy to information that doesn't filter its way down to the public. And when you see someone of Warren Buffett's stature making such a strategic, determined, measured move out for a month and a half in tranche after tranche after tranche, reducing his exposure to Bank of America after we've been talking about fragility in the banking system. Alistair McLeod's been talking to us about that for 2 years. Last year, in 2023, we saw the second, third, and fourth largest ever bank failures in the history of the United States. And everybody thinks, well, the storm passed. We're in the clear. And we've been talking again and again on this channel about how there are banks that are in serious trouble. And you mentioned commercial real estate is one of those areas where they're in trouble. Their bond portfolios, another area they're in trouble. And when banks get in trouble, usually bad things happen because the bankers bank, the Fed takes action that is in the interest of the banks and not in the interest of the people. And it's generally a good time for people to seriously take stock of reducing our exposure as individuals to the banks and only keeping in there. I just talked to Bill Holter today. With that interview will come out tomorrow. Bill Holter says only keep in the bank what you absolutely have to pay your bills for the next few months. Everything else should not be there. Anyway, your thoughts on the meaning and the implication, the significance of Warren Buffett selling a major portion of his holdings in Bank of America. And the last time, just to remind everyone, the last time he lightened up that much on bank stocks was right before the global financial collapse.
Yeah,
Okay.
he's been selling like crazy. It's 12 consecutive sessions. He sold stock and lots of it Bank of America. He's the greatest value investor of all time, yet he's massively in cash. What does that tell you about what he thinks of the value? Most of what he had sold was already done by the end of the second quarter, along with many of the insiders. And I have felt for a very long time, Bill is like my brother, and he always corrects me. He said it's too stupid to not be planned. I say it's too stupid to be stupid. Same thing. But when you look at the banks, if you wanted to call the banks, knowing that most people have no idea what a bail-in is, really, truly, no, most people have no idea, and even fewer people know about money market gating. At the same time that the money markets are now at all-time high records, people are flooding into the money markets, and they feel safe there. But during the Dodd-Frank Act, they imposed money market gating. You and I have talked about that on this show, and you actually had in real time suffered something to that extent. You know exactly what I'm talking about. And people who think they're safe in a money market earning 4.5%, if the system breaks or a bank like Bank America were sacrificed at the altar, those people would in real time have a religious experience. Their money is stuck. You cannot move out. And it's called breaking the buck, where when Lehman Brothers went down, it carried with it much of the money market funds. Everyone tried to yank it, and they imposed you can't do that anymore. You have to go down with the sinking ship. I have felt for a long time they will sacrifice one of the big boys. And, you know, there was an investigation going on in, if I had to guess what this is about, I can't say it's true, but there was an investigation, I think, with TD Bank in Canada, had something to do with improprieties, had maybe something to do with money laundering, drug money, whatever it was. And the article I read said, well, this isn't over yet. There are banks, big ones in the United States, that are in the crosshairs of this scandal as well. And maybe this is what it is. Ted Butler, God rest his soul, for a year told us that Bank of America was the one that had 1 billion ounces of silver short in the OTC market and 35 or 40 million ounces of gold short in the OTC market. Maybe that is the case. When you see Warren Buffett selling a man who is inside the inside ring, it's concerning. And if I were to guess, I've said for a long time, if they were going to sacrifice one of the banks, I think it would be Bank of America or Wells Fargo. If one of those banks were to fail and be bailed in, you can only imagine the carnage. You can only imagine the panic. You can only imagine the bank runs. But that's exactly what the modern monetary theorist wants. Call the banks, create chaos, bring all, I mean, and that's what Jerome Powell told us, that there will be bank consolidations. Well, if Bank of America failed, and everyone said, my goodness, they're being bailed in, everyone lost everything, the run on the banks would be something to, you know, that would be written about in history books for 100 years, that it would be right up there with the chaos surrounding the Great Depression. It would happen like that. And that's exactly what a modern monetary theorist who wanted to get rid of the nearly 5,000 banks would do: bring down one of the big boys and let it get bailed in, and let all of that money market money get gated. And, you know, watch how fast they roll out the CBDC. Watch how fast they come in on a white horse and say, but we're here to save the day. Yeah, I think the banking problem is not going away. You know, the Basel III mandates go into effect, I want to say sometime in October, where they have to hold a whole whopping 4% in terms of reserve requirements. These banks have virtually nothing in the way of reserves. And if 4% would be a well-capitalized bank, you know, what does that really say to the entire system? And I just think people are underestimating the significance of the problems that would result if a major bank were to go down. And with this commercial real estate problem increasing, with the problems in the cities where the lack of you know, demand in all of these commercial properties that have been built up for a very, very, very long time, it's going to bring down some banks. And, you know, why not bring down one of the big ones if you really wanted to reset the system? If all of this is too stupid to be stupid, it wouldn't take much more than sacrificing Bank of America the same way they sacrificed, you know, Lehman Brothers, and let it go. Don't bail them out. Let them be bailed in and watch the carnage that happens. It would be a black swan that people, I don't think, have any idea how fast it would crater the whole system. But if that's what you wanted to do and issue a CBDC, it's not a bad way to do it. And you know, you can blame Bank of America instead of blaming everyone else. Then it deflects and misdirects the blame. I have a bad feeling about it when Warren Buffett, maybe it's just nothing more than him selling and taking a profit and moving on. But I will tell you, to me, it kind of is spooky.
We also have our late great friend Rob Kirby, rest his soul, who talked to us about Bear Stearns. You mentioned Lehman Brothers. Bear Stearns was also, he said, selected for extinction during the 2008 collapse because they wouldn't play along with the corrupt games that the other main banks, the too big to fail banks, were all getting together on, and they were selected as the one that was going to take the hit.
Well, that's the
So,
point. I mean, if it's that easy to just to say it's their turn, they're going. Yeah, I mean, why not? And that's the old story that I've told a million times that, Chris Marcus's interview with Bart Chilton, and it centered around Bear Stearns, and they had that large short position, and Jamie Dimon had to take over Bear Stearns' short position. And everyone should watch that video. It's amazing. And that would follow logically what Rob is saying from what Bart Chilton said before he died on Chris's show, that yeah, this all happened, and it centered around Bear Stearns and centered around Jamie Dimon taking their silver position, and then not meeting his obligations to pare down the promise he made to pare down their position limits, and Bart Chilton, the former head of the CFTC, goes into his office, into the office of Hank Paulson and Ben Bernanke, and says they need to be prosecuted. They're in violation of antitrust law and in violation of our agreement. Said, back down, Bart. It's a political decision. Bart says all of this, and then he dies a week later. Probably just a coincidence, but the point I'm getting at is that, yeah, if indeed Bear Stearns was selected because they weren't playing ball, and indeed Jamie Dimon did inherit the largest short position in silver, and indeed Bart Chilton was told to back down because they didn't do what they said they would do. They were in violation of antitrust. There's so much stuff that we don't know about that is happening under the surface. And to think that Bank of America could have a crosshair on it and they're going to tell Warren about it, why not? Why is that not possible with all of the craziness we've seen over the last few years? To think that that isn't possible, there's a very fine line between conspiracy and reality. That I do know. And, so I guess nothing surprises me, but ask yourself, why make these rules? Why make money market gating? Why make bail-in legislation? Why do all of these things if you're not prepared to ultimately enact them? And I think, coupled with David Rogers Webb's great taking, anyone that has a tremendous amount of money within a system like Bank of America needs to think twice, especially when we hear stories like this.
and it's not just Bank of America that's showing signs of distress. So, folks, if your loved ones have a significant nest egg in the banks, the FDIC does not have the assets to have your back. And do you really know more than Warren Buffett does about confidence in the banking system? So please think through that carefully and take corrective action, take protective action, just from a preparedness standpoint, if nothing else. Okay, Andy, the next story is about Russia announcing that in the month of September, they're going to buy $19.2 billion worth of gold. And they've already started. Your thoughts on what this signifies? And I kind of take those two kind of like it's a beautiful counterpoint. They come out at the same time. Warren Buffett's dumping his Bank of America stock, and Putin's announcing, both of them in the billions. Putin's announcing Russia acquiring gold. Both of those, to me, are ways of reducing risk. But your thoughts on the Russia's move announcing it into gold?
That's 36,000 ounces a day at current prices. It's a 600% increase in what they were doing. And when you put that in context to what we are seeing coming off of the exchanges, to me, it's part and parcel with what I've been screaming over and over and over again. Yeah, I say the same stuff. I do, but it keeps happening, and it keeps happening, and it keeps happening. And if you don't pay attention, you miss it. The recent data, as of August 31st, shows us that when you talk about the amount of silver that's been taken off just the LBMA in the last month, from July 31st to August 31st, July 31st, they call it the float in London. There's 800 million ounces of silver in London on the LBMA. 500 million belong to the ETF. So the float, the 300 million, are the ounces that are available to be delivered that back the bars. So when we talk about the float at the last day of July in 2024, that float was 336 million ounces of silver, or 10,440 tons. At the end of August 31st, 1 month later, it's 309 million or 9,599 tons. In other words, 27 million ounces or 8.1% of all the silver in the London vaults was drawn down in 1 month, in the month of August. And so when you talk about how fast this is happening, it's ridiculous. And then you look at COMEX, and since November 2020, when I started on talking about this with you, that's about when I started talking about all the deliveries coming off of COMEX that had never happened before. Never. We've seen in gold, 2,136 tons of gold have stood for delivery, and 24,072 tons of silver have stood for delivery. And I remember I said that just in terms of the amount of 336 million ounces is 10,440 tons. Well, since November of 2020, we have seen this massive amount of 24,000 tons taken off. So you're talking, almost what are we talking? 800 million ounces. That's almost the exact amount that India has imported in the last 3 years. And so this is something that should not be overlooked or taken lightly. That doesn't even take into account those numbers off of COMEX, the exchange for physical, which we've talked about, where massive amounts of gold and silver are purchased in the West and delivered in other parts of the world, usually London, but there is that little known contract that was developed in 2015 that allows metal to be delivered to BRICS Hong Kong, which is a COMEX facility, which then it's usually in the kilo bars, the mini contract on COMEX or the mini kilo bars. Well, that's what's traded on the Shanghai Metals Exchange. So they can buy and stand for delivery on the mini contract and send it to BRICS Hong Kong, where then who knows where it goes, probably gets trucked over to the Shanghai Exchange, which deals in kilo bars. The point of it is that all of these countries understand what is happening. And they understand that the suppression of the Western market is that's how they win the game. And they're just flaunting it right in our face, not only by taking delivery, but saying, yeah, we're going to buy, 36,000 ounces a day for the next month. This is what they're doing. They're using the suppression of the Western paper market against us. I've been saying that forever, and they are draining the exchanges. And I want to read something to you that I came across yesterday, and it's close to what we're talking about here, but I think it's really, really, really important for people to hear this. Let me just find it real quick, because I don't know, it blew me away when I read it. And you know how there's been all of this talk about revaluing gold. We've talked about Cynthia Loomis, the senator from Wyoming, who talked about revaluing gold in order to partially pay for the Bitcoin strategic account that Trump wanted to build. We've talked about the gentleman, the head of the central bank of the Dutch central bank, who says we should revalue the price of gold to get our balance sheet in order, more or less. So, there's a lot more to that than meets the eye. And I wanted to read this to you so people can understand just how real this is. And this is from 1974 as part of a Freedom of Information Act. It was a staff meeting, and it was between Thomas Enders, who is the Assistant Secretary of State for Economic and Business Affairs in 1974 under Nixon, and Secretary of State Henry Kissinger, who, of course, we know had just gotten back at this point from striking a deal with the Saudis. So this is right after we are now the petrodollar, and this is the meeting that now we see through the Freedom of Information Act, the transcript. So let me just read this to you. It's about 4 paragraphs, but I want you to keep this in mind as we talk about the potential for them revaluing the price of gold and why all of these countries are massively buying it, okay? So this is 1974. America's objective, the official transcript of the meeting quotes Enders as saying, was to move towards a demonetization of gold to begin to get gold moving out of the system. Kissinger asks, why is it against our interest to have gold in the system? Enders replies, it's against our interest to have gold in the system because for it to remain there, it would result in being revalued periodically. Although we still have substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. Well, now it's concentrated in the East. Anyways, he says this gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. Kissinger says, but that's a balance of payments problem. Here's the cool part. Yes, but it's a question of who has the most leverage internationally, Enders answered. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. All right. So now we talk about gold in the unit and gold being used to back a new system. And who's buying all the gold? Oh, yeah, it's the central banks, more so than in any time in history. And what is gold? We know it's the only other tier one reserve asset. And what are they doing? They're all repatriating it and bringing it home. And what's happened in China over the last 6 months? Well, they've pushed silver $4 an ounce higher than it is quoted in the West. So isn't that really the price? So if you are a sophisticated trader or an idiot trader on Goldman Sachs or JP Morgan, well, you got 50 million ounces, you can sell at a $4 premium. You just cleaned house. You just made $200 million. So you're happy about that, but that 50 million ounces, that ain't ever coming back. Never, never, ever. And so the point is that is the price. So when you talk about they knew this in 1974, and gold is held on every central bank balance sheet in the revaluation account. And Enders was telling Kissinger, we can't let them have the gold. They can revalue it. Well, what if that's the ultimate plan of the BRICS nations? What if they're the ones buying all of the gold, not really telling us how much they have been buying? What if Russia's been buying that much under the table for a long time? They're not telling us how much they produce at all, nor is China. The IMF said China has way more gold than they tell us. Your buddy Alistair, who I think is one of the smartest guys in the world, says they have 40,000 metric tons, not the 2,700 metric tons that they tell us that they have. And the head of the IMF said they got way more. The lead analyst for Bank of Montreal says they have. Well, what if all of these countries ultimately plan to revalue gold, just the way that Senator Loomis talks about? Now you have a dominant position to create a new system or to create reserves. So I think it's very interesting when you see that these countries are accumulating the gold the way that they are. It's no small thing. It shouldn't be underestimated. It shouldn't be dismissed. It's a very big deal, whether it be draining the exchanges or just outright buying, or like we said last week, China going all around the world, according to Sean Kuhn, the head of Dolly Varden Silver, and buying up all the concentrate and all of the doré bars from the miners and then sending it home and refining it so the metal doesn't come off of an exchange. It doesn't come off of a platform that allows the price to be affected or the volume to be tracked. This is a high stakes game, and we are losing and they are winning, and they are using our stupidity of suppression of the paper markets to do so. It's a big deal, Dunnigan. It's a really big deal. Can't hear you.
You're right. I was on mute. I wanted to give you a chance real quick before anybody else has to leave. We've had a couple that had to fly to give you a chance to hit the specials that we have for this week, and I can pop them up here for you. Hold on one second, if you
You
would
know, I
let
never know
me.
what those specials
Here
are.
they
So you
are. Here they are. Boom.
So the 10-ounce kookaburra, it's one of the coolest coins you've ever seen. I have a bunch of them myself because I love them. It's about the size of a hockey puck. You're looking for a cool coin. It's the one of the coolest you will ever see, ever. Pre-33 gold. This is the first time in years, the last few weeks, that it actually makes a lot of sense to buy this stuff. Premiums are as low as I've seen them in a long time. Would be my favorite way to own gold, period. And I think people should take advantage of it if they're looking to buy gold. And then the 10-ounce platinum maple leaf again.
1 ounce.
I'm sorry, pardon me. 1 ounce platinum maple leaf. Yeah, they don't make a 10 ounce. Is platinum has a very compelling story behind it, a very compelling story, and it's something that I think people should own some in far. To me, it's a distant third after gold and silver, but it is compelling, and there is a lot to say in terms of its value related to gold. If you're looking to buy platinum, this is as good as it's gotten in a long time, in several years, in terms of availability and premium.
All right, thank you so much for that. I'm going to unshare that and we'll get to some of the viewer questions here. And here we go.
Yeah, about 5 more minutes before I
Yep,
have
we got
to
to give you time
launch
to
the
switch over
maiden
to.
voyage.
That's right. We've got questions. Some people have asking if there's Tobor says, would Andy recommend taking a withdrawal penalty in a Merrill Lynch 401k to protect their money before the collapse? I
Well,
know that
that's a
depends.
tough question
Personal
to ask.
financial advice depends on everybody's situation, but
It does, but it's not only the penalty of 10% if you're under 59 and a half, it's also the income taxes. And remember that when you, depending upon what tax bracket you're in, if you take a distribution or liquidate your IRA for $300,000, that's income. And that's going to bump everything, your entire income up into a higher tax bracket, presumably, unless you're in the top bracket. If you're in the top tax bracket and you're wondering, should I do it? Then it all boils down to, as far as I'm concerned, a 10% penalty. And is that 10% penalty worth peace of mind? The taxes you're not going to get around one way or the other. You're going to pay it. And if Kamala wins, they're going to go higher. So, and so is the price of metals. So, do I recommend it? I did it myself in 2009, and it was the wrong decision in retrospect, but I've never lost a minute of sleep. Take control of your own finances. Do not let other people tell you what to do. You ask an advisor, he'll tell you you're an idiot. But
Mhm.
peace of mind and sleep at night is the most important asset you can own. And unconventional times call for unconventional decisions. And you all watching this show are probably more well informed than the people advising you about your money. So keep that in mind.
I will also say that that's what I chose to do. And about one third of the clients who I consult with about IRAs and that sort of thing end up doing that as well. Because, for one thing, if you do take out a precious metals IRA, you're working with a custodian company, they open up a vault account for you. You won't see those metals until the day you finally do take a distribution. If you want, and everything's transparent to the IRS the whole time. If you want privacy from the IRS along the way and you want to hold your metals personally in your hand starting on day one, that needs to happen outside of 401k or precious metals IRA. It needs to happen privately. So you want to take your distribution, go ahead and pay your
Yeah.
taxes, pay your penalty, and get that bitter pill swallowed, and then you're free to do what you want privately.
Yeah.
Uh,
Yeah. I think that's good advice.
People are talking about if there were a run on the COMEX, what would that look like? It sounds like you're saying there already is. It just hasn't been acknowledged.
Well, there is a run on the COMEX and but not a real run yet. I mean, there is and there isn't. Um, a real run would be a failure to deliver, and a failure to deliver would incite a real run. I think you could argue we're getting down to the levels where you're seeing countries like China go and buy Dore and concentrate directly from the refine or the
Mhm,
miners, so they don't have to do something
mhm.
like that. They've already taken so much from the COMEX, so much from the LBMA. They're getting very, very creative, and now going directly to the miners. They're smart, they know what they're doing, and they're trying to do it in a judicious manner so as to not cut off their nose to spite their face. There will ultimately, very likely, be some sort of a run on one of these exchanges. 90+% of all the contracts traded on the LBMA are paper contracts. And when you talk about gold and silver being rehypothecated hundreds of percent, many hundreds of percent, um, it's what does it look like? It looks like chaos happening very quickly. And uh, shutting down my industry. If the COMEX isn't there allowing us to hedge, we're in big trouble, huge trouble.
Any final thoughts there? I'm going to pop one more question here, and then I'm going to put the link to your video here, and we can get you out of here in about a minute. John S. says, what is your expectation for the October BRICS meeting? Last year, the analysts got over their skis based on the Kenya embassy functionary comment about dump the dollar and get it into make other plans. But your thoughts about what we're expecting next month in the BRICS meeting?
It's a good question. I don't know. I mean, Delma Rousseff came out and said in principle they've agreed to the unit token. Are they going to announce it then? I don't know. 59 countries have formally applied. There are rumors out there that they're kind of putting a hold on admitting these countries until they get this ecosystem in place. I think it looks to me, I wouldn't expect it to be earth shattering. Just know that it is a continuation of a growing trend and they're doing it the right way. I'll tell you this: if they do come out and say that the unit is now official and we're offering it over Project Enbridge, it's the beginning of the end for the dollar almost immediately. I think a lot of people are expecting there to be something big and huge and earth shattering. I'm not sure if I think that or not, but one thing is sure that they are moving in the right direction. They have come out and already said that there will be BRICS Clear, which is a system of clearing securities through blockchain. There will be BRICS Insurance. They will be the unit, and there will be the Enbridge. And so between insurance, between clearing, and B2B, business to business, they're thinking and covering all of their bases. And that's something to be concerned about. So I don't know what it looks like, but I think it's a further progression of what we already know. And if they decide to, um, get really aggressive and they issue the unit and say we're going to start taking unit for settlement, things are going to get very interesting very fast leading up into the election. They also have BRICS Insurance. So BRICS Insurance, BRICS Clear, BRICS Pay, which is a payment system, retail, and then the BRICS unit traded over the BRICS Bridge or M Bridge. So these are the things that we know that they're going to talk about. How does it all play out? Not sure.
Okay, folks, I just posted into the live chat the link to Andy's live stream. Andy, we're gonna let you go. Thanks for being here. We'll see you there shortly. Everybody, we got hundreds and hundreds. How many? We got 884 people here right now. Let's all jump on over to the link I just posted in the live stream and help Andy kick off a successful start of his new live stream.
I
Andy, thanks for joining
appreciate you,
us.
Dunnigan. You're awesome, brother. Thank you so much.
Take care. Everyone, we're
Bye-bye.
gonna we're gonna jump on Andy's now. Let's go.